Good morning, ladies and gentlemen, and today we're going to be talking about, is this the turning point, and how do you lose $200 billion in one single day? And we have to look no further than ask that second question to Apple, which lost nearly about $200 billion on its market cap, down 3% for the close of the day roughly, and almost 5% on the day. Well, not shocking, Apple today having a really rough day. And maybe why was that? Why did Apple have such a bad day? Well, China announced this. It was banning iPhones from government officials. Almost immediately, Apple loses billions. So that's a lot of income, that's a lot of revenue. As you know, the Chinese government is pretty massive. That's a lot of paying customers, especially because it's a government. They do have some features that they may request from Apple, which is a profit generating revenue. And they basically just lost a huge chunk of their market share at a sector that has been driving a lot of profit for them. So naturally, the stock reacts pretty poorly, shaving off a nice little haircut on it. As you can see here, it did not break the lows. So if you're an Apple fanboy out there, or like Apple as a stock, it is still in an uptrend, forming higher lows. So higher low, and now higher low. Now, here's my warning. This is going to be a video filled with warnings for both sides. So if you're team bull, team bear, you're going to get something that you like and something that you don't. However, I'm not here to make your ego grow. I'm here to teach you guys as much as I can and point out maybe some holes in your theory. So Apple right now could be forming a very janky inverted head and shoulders right here, but I really wouldn't expect that necessarily to play out. However, gap downs are for buying, and basically, bulls stepped up today. They didn't fill the gap completely, so you still got some more work to do out there, bulls. And the bears did defend the gap, so we have to see which team is going to prevail tomorrow. Tomorrow is another day of trading, closing for the week. And if we actually look at the week, it's pretty bad for Apple. This is a bullish engulfing candle that if we close, and I'm going to be looking for that 178.48 close on Apple. I want to see if it can get back above that, because that would mean that you had an inside kind of week. You broke down, failed to hold the new low, close, or the new range of the low. So we really have to see, and can they actually push it from the open of the week of last week for the 180? That would really be a strong push from the bulls. And if the bears can defend this and actually make progress lower, let's say you close down at the 175, 172 on Apple, then wow, that's going to be an absolute massive day, especially being the #1 company in the world by market cap, pushing it 5% down on one day. That took a lot of volume that we saw here. However, it is a green day, so there was a lot of buying out there. However, I do see a target easily for Apple. I said this once we broke the 50 with conviction right here, failed to hold it right here. I'm saying that we're coming back down to these moving averages. I'm in team bear for Apple in the longer term. In the short term, I do think this gap could get filled. We could form possibly a broken W pattern here and push up. If we get back above the 50, that would be a pretty easy conviction for that W pattern coming to fruition. Or if we break the lows here, basically breaking the 172, I'm going to say roughly, then I'd be looking for that 162, 163 retest of those moving averages, and we go from there. That would complete the A to B pattern on the way down, which if we just draw it out simply here, A to B, B to C, projects down to that 163.92, exactly where the moving averages are right now. So again, I'm more confident, not necessarily saying this is going to happen. I am more confident in Apple coming back down to these areas of the moving averages versus having that push to the retest of the 50, just because you didn't show much strength when you were back above it and you really didn't hold it. So some gas is being taken out of the tank. And if we look at the market as a whole, still in the weekly range. Now, you are looking more bearish than I previously thought we were going to be. I thought we were actually maybe get a retest of the 50-day. Got that yesterday, failed to close below it. Now we got 2 closes below it. So if you're in the camp for the bears, here's my token to you. I'd be looking for that 50-day rejection off of it intraday to basically today, and then slamming it down for the week, basically creating an inside week on the S&P. So that'll be pretty solidly bearish for the week, just because you would close the weekly out below, breaking down below. So now that is stronger momentum in your ball of the court. However, do not fail to recognize that you could be forming a possible W pattern here. It is going to take a little bit to play out, and it'll probably take all the way to October. So again, you could, September traditionally known as a very bearish month, so don't get your egos wrapped around that, bears. Again, I'm trying to be cautious for both teams. If the Bulls defend this, form that W going into October, that's a classic Santa Claus rally scenario. So I'm going to be on the lookout for that W because it is a hidden pattern that not a lot of people are expecting. Again, what people are least expecting is what usually happens. So if the Bears kind of get euphoric right around the same way the Bulls will get euphoric of buying up here, then that W could easily play out. Tech having a similar story here. Again, W could be forming here. It would be a slanted W in my opinion on Tech just because they have this trend line right here. So you're probably looking, if you're in the camp that want to buy the NASDAQ, the 164 price point is not an insane price point to buy. Your risk to reward is pretty simplistic just because it is an area where you're having double trend lines, you're having the weekly range, could wick down below it to the trend line, hold the trend line at the daily close, and then go up higher. So again, if I was to trade this, I'd be looking for that bounce actually off of this. Even though I'm bearish on the market as a whole sentiment, I do see that bullish pattern playing out possibly, and we just have to see how it all plays out. Now, there could be countermanding evidence to that comes out in the next 2-3 days that we have to reassess our strategy. But right now, I'm keeping an eye on that bullish play because I, one, don't want to miss out on it, and I don't want to just be blindly in one camp. It's okay to be wrong. It's not okay to stay wrong. So right now, I don't think either team has a skewed advantage. I think the Bulls have maybe a bigger inflated ego versus the Bears just because the Bears took a pretty massive beating. And case in point, even with Apple shrugging off, we did shrug some of the greed out of the market, but we're just in neutral. We're not really, haven't seen true fear. You haven't been in fear, you haven't been in extreme fear. So bottoms are traditionally found in fear and extreme fear, or very good discounts. Right now, the market is not very fearful. It's basically saying the sky is the limit and no fear at all. Looking at VIX, and I warned you guys in the weekend deep dive, it will be linked down in the description below, that I did not trust VIX at this point. You had a lot of wicking tails on VIX, and right now, as we see here, VIX, another wicking tail, solid inverted hammer. This is very bullish for the market, and why I'm saying that that bullish pattern could play out. I'm going to be keeping an eye on it and updating you guys, so make sure you guys subscribe to the channel and like the video so you can, one, reference the video, and two, keep up to date when we update you on that bullish pattern because it's going to be a pretty awesome money making opportunity. But if we just quickly scroll through some of the bigger names, like your Microsofts, your Amazons, your Googles. Right now, Microsoft, we had a comment from one of our viewers talking about that doesn't really know if they should buy or hold or sell Microsoft right now. I'm in the camp of I want to wait and see. So if it breaks this consolidation, like the 326, 325 area, I'd be looking, hey, if I got profits, I'm taking it just because that's really a lot of weakness. Now, it consolidating around the 50 is no man's land. Plain and simple, it can go either way. Consolidation means ready for expansion. So I have to basically assume that it's going to have a big move soon. Right now, you're consolidating this region, squeezing tighter, so you're going to have a massive move up or a massive move down. I couldn't tell you which one, and anyone trying to tell you which one it's going to be is kidding themselves. They absolutely don't have a clue, and I do see this trend line here, so if we don't really get that bullish expansion soon, I'd be leaning more towards the bearish skew. But then again, I am naturally biased more towards the bearish skew, so I have to keep that in mind, and you have to understand your own bias and understand where you're going to go. Now, if we look at some of the other names, Amazon, I've been talking about Amazon that it looked weaker around this area, but right now it's actually showing more strength, powering up above both moving averages. Now let's see if it can hold it, because again, it faked you out once, twice, thrice almost, so take it with a grain of salt. Google, as Fatal talks about this channel, that he loves Google and its fundamentals are really showing. Got one gap that didn't fill, two gaps didn't fill, looking very reminiscent of NVIDIA, and obviously have an A to B pattern on the way up. So Google looking strong. Can it help pull the other leading tech stocks up? And last but not least, we go to our favorite, NVIDIA. coming down closer to its moving average, the 50-day, which hasn't really retested in a very long time. It did break below it and consolidate here, so we have to keep an eye on this price action. It didn't nearly fill the gap on the day. So again, you had decreasing volume here with price kind of just stagnating, so we should see an expansion out of this territory very soon. Upside, downside, same thing like I said with Microsoft. It's very difficult to tell which one it's going to be. However, chips right now are looking a little weaker, especially if you look at like AMD failing and bashing its head against that 50-day. Until you get above that 50-day, I would not be looking to stay bullish on AMD whatsoever. I know I'm going to get some flack for that. And Intel just powering up like no tomorrow, all the way to $38. So now it's starting to tackle this price action over here that it previously had. So could be meeting some resistance relatively soon, but we have to see how the whole chip sector plays out, because chips usually lead tech, tech lead SPY, as the famous phrase goes. However, I do want to leave you guys with one last thing, which is talking about the Federal Reserve as a quick last minute wrap up. So I just want to give you guys some highlights from the Fed speakers. We had 3 different Fed speakers, but I'm specifically going to focus on Williams because he has a lot of influence with Powell. He said, I expect unemployment rate to rise to low 4% range, basically meaning he needs to see more slack in the labor market. They're not really saying they're there yet. And when you read these, think of someone that if they're conquered inflation, how would they be acting? They would be acting more in a euphoric nature versus a more cautious, trying not to spook the market one way or another. Again, the Fed has been very keen on this tightening cycle to not really be very directional. They try to kind of walk that middle line and let policy be digested by the markets, even though the markets just have their own psychologically screwed up variant of what the Fed thinks is going to do. But I digress. I did love this comment from him. The economy is not seeing a traditional inflation cycle. Well, because you don't really see this crazy hyperinflation style inflation, and then the Fed just jacking rates up like no tomorrow, completely inverting the entire financial sector. But again, not your traditional cycle, meaning there may be more work to go. Slowing wage growth points to some success in lowering inflation. Keyword, some, not complete success, meaning there may be more work to go. And then I see a risk of stronger than expected growth, and the latest consumer spending data has been strong, basically indicating they have not crushed the consumer, so more work to be done. You're not really seeing this bullish play from these Federal Reserve officials, specifically Williams, which is a key player in the Fed. So I'm going to leave you guys with these final 3 comments to close, and please keep this in mind of if you were successful, would you be saying this if you were in his shoes? Need more data before deciding on September move. Inflation is far too high, but moving down. And last but not least, the open question is if the policy is restrictive enough. I'll leave you with that. And basically, thank you so much for watching. Throw a comment down below if you think the Fed is done, not done, any stocks you want us to necessarily cover, and I hope to see you for the weekend deep dive tomorrow on Saturday. Thank you guys very, very much.